tonight's class is more about psychology and we will talk about reasons why most new traders fail in trading, and most importantly, how to deal with the roller coaster effect. The roller coaster effect, I know most of you guys have experienced it. It's you trade months, maybe years, and you see your account not growing, not really getting wasted, but all the time moving up and down, your amounts of money in your account. It's not actually growing like the way it's supposed to be, and this is called a roller coaster effect. We'll talk about what causes all that and how to be able to stop it and actually start trading professionally and grow the account, because after all, this is what we're after. Now, I just looked at the numbers that came out for Japan, the retail sales and the industrial production are way above expectations, and we see some movement. But anyway, let's continue. Later on we have the Aussie retail sales and also the building approvals in about an hour and a half. So we might see some busy Asian session today. Now let's start with the most common mistake most traders do, and this is they try to learn all different strategies and ways of trading. Every new trader jumps from a strategy to a strategy, not even given a chance of the strategy to actually show the real results. When you guys try a new strategy, the first thing is that in the beginning, most likely is you don't even know how to trade the strategy correct. So there is a learning process, and even if you know how to trade the strategy will have bad trades. Now, the newer the trader to the strategy, the worse the results are. Now, if a strategy usually has like 70–80% winning ratio, and you guys start trading that strategy, you may start with 20–30, then as you're getting better, you may go to like 40, 50, 60%. And once you master the strategy, you will be able to trade that strategy with the actual percentage percent rate the strategy would perform. Now most of those traders, most of the new traders, they won't even give enough time for themselves to actually get comfortable with strategy, learn the correct way to trade it. They will take some losses, and what they'll do is most of the time they will start looking for a new strategy that would perform better. But guess what? It wasn't actually the strategy that was not performing well, but was actually the trader that didn't know how to trade the strategy. Now, this is the first mistake. So, if you jump from a strategist to a strategy all the time, what you'll do is, most likely is if you're trading live, even if you're not trading live, you will be wasting the account. You won't even be doing the roller coaster effect, but you will be wasting the account. Now, the second kind of traders are those who they go through that learning process. They will trade a strategy for a couple of months, but then they will see the strategy losing. And of course, like every strategy would lose, you may even have like 5 or 10 bad trades in a row. What's not to like? I mean, like if the strategy has been proven to make money on the long run, why not try it? Now, most of those guys, they will learn how to trade the strategy, but then once they see some drawdowns and they see some money being lost, they will stop trading it and they will start looking for a different strategy. Now, those people are educated, they have experience, they have the knowledge to make money. The thing is that they're not consistent in the way of trading. Now, they know how to make the money, they have the knowledge, but they won't keep doing the same what they're doing when they're making money. They will do that, then they'll lose some money, and they will start looking for the new holy grail, and they will try to learn a new way of not losing money. Well, this is very important when I said that the trader will start looking for a new way of not losing money. First, if we want to learn something new, it should be for only one reason, not to learn how to avoid losses, to dodge losses, but we should be learning new ways of making money. Now, every strategy will be losing money. The thing is that we need to accept that we'll be losing money at some point, but after losing money, this losing money will only get us closer to making money. Because if the strategy is, let's say, 50% accurate, but on your winning trade, you're making 50 pips. On your losing trade, you're losing 25 pips. You know the strategy is 50% accurate. 5 out of 10 trades, you will lose 25 pips. But 5 out of 10 pips, 10 trades, you will make 50 pips. Well, if you know that, will you try to dodge any of the trades, any of the trade setups? You will see a trade setup, and will you try to avoid that trade setup if you know that you have 1 or 2 chance to make 50 pips? If you lose 25. If you win, you make 50. Why in the hell would anyone try to avoid a trade setup if you have 50-50 chance of making money? Absolutely no point. And this is exactly the same way anyone should be thinking about any strategy that is proving to work. You should not be trying to avoid the loss, because this loss can actually be a winning trade. And if your winning trades are better than your losing trades, why try to avoid those trades? This is a big mistake a lot of traders do. And as they trade more and more, they focus on learning ways how not to lose money. Accept the losses. Accept the losses and trade those losses so you can make money on the next trade. If you cannot accept the loss, you won't be able to trade. You won't make money in this market, period. It's better if you just quit and look for something else to do. The only way to make money is if you can accept the loss. If you can't, this market is not for you. So, trying to learn something new, the only reason for this in our head needs to be, okay, I'm learning a new way of making money. Let's say I've been trading Gartley, but I want to learn different thing that will make me money. And then you go and you learn BAT. Now you have two different patterns that you can use to make money. Then you go and you learn a reversal pattern, head and shoulders. Okay, this is a new weapon in your backpack that you can use for yourself to make money. It's not something you will use to avoid losses. Okay, then you go and you learn butterflies. This again, something new in order for you to be making money, not something new to avoid losses. This is the structure of your education. This is the way you're supposed to be thinking. The sooner you go over the losses, the sooner you start making money, and then you will be able to stick with one strategy. Now, the longer you trade a strategy, the better you'll trade it. And then if you trade one strategy long enough and you grow through all the cycles, making money, losing money, then you have a cycle where you have a winning trade, you have a losing trade, winning trade, losing trade. Then you may have 10 or 20 winning trades in a row. Then you might have 5 or 10 or maybe 20 losing trades in a row, depending on the strategy. But after we go through all those cycles and the strategy proves to yourself that it's working strategy, then you don't need to change anything in your trading. You know, okay, this is working for me. I don't need to do anything else but this strategy. I don't need to try a new one. Now it's only up to me to become better and make my success rate, my winning ratio higher. Okay, now I'm doing 50%. Next month I'll be doing 55. Next month I might be doing 60. The more I trade this strategy that is making money, the better I'll become and the more money in my pocket. This is the way we all need to think. If you jump from one strategy to another every 2, 3, or 5 months, you won't give it enough time. You won't give it the chance to show you if the strategy is good or not. Now, a strategy may not fit your emotions, may not be good for you. Some people may like to trade patterns. Some people may like to trade intraday strategies. Some people may like to scalp 10, 15, 20 pips. Different strategy will fit different person in a different way. And once we find a strategy that would suit us and our emotions, we should stick to that same strategy and trade it for a longer period of time. This is the only way we will learn to trade that strategy correct, and this is the only way we'll start making money with it. I know a lot of traders trading for years and years, and they probably know every strategy out there, every single indicator. They may have like hundreds of EAs on their computers, and they're still not living out of trading. And the only reason is because they know all that, but they know just basics. They have never tried half of all this that they have on their computers. They will trade one for 2 weeks, maybe 2 months, and they'll go to the next one. They won't like it because they didn't give it a chance. And that's the only reason. Now, there is another group of traders who would try to change a good working strategy. Now, this is another big mistake a lot of traders do, that they will take a strategy and start changing either settings in indicators, replacing indicators, adding their own indicators. Now, why would somebody do that? This strategy, if it's a good strategy, has been developed for maybe a year or more. It's being back tested. Every indicator that is in the strategy is in there for purpose, and there's no point of view after a month or two to start changing that strategy. There is some smart people who have been working on it for months, and they switch and they have those settings exactly the way they are for a reason. They have those indicators for a reason. Now, if the strategy is not a professionally done strategy, this is another story. Yeah. Some of you guys say I'm guilty of all of that. Well, now you guys would know what to change and how to think about all this. Now, why we don't want to change a strategy? Let me give you an example. Now, what is a strategy? A strategy is like a recipe for a meal. Let's say New York cheesecake, just for example. Now, what does the recipe have? The recipe first has ingredients. Now, all those ingredients are the indicators in the strategy or the system used for the strategy. What does the system have? The system equals the ingredients. The system includes all the indicators with the settings, the correct settings, like the ingredients. Okay, we need that much sugar, we need that much flour, we need that much whatever, we need that much different sweeteners, or whatever we need to put in that cheesecake. Now there was a professional cook who came up with this recipe, who's been cooking for like 10-15 years, and here comes Martin that has never cooked, and he grabs that recipe and he's like, okay, I won't put 2 ounces of sugar, I'll put 6 because I like it sweet, and then I will try the cheesecake and will taste like crap. Why? Because I changed something perfect that was good, was done by a professional, somebody who knows his job. I changed it with something I like, and at the end even I didn't like the end result because this is not my job and it's not up to me to be changing all that. Now in the recipe we would have, okay, we need to put this ingredient now, then after that many minutes we need to put that ingredient, we need to shake, we need to put it in the oven or whatever, maybe in the fridge for that long. It is the same with the strategy. We need to trade between these and those hours. We need to enter buy here, we need to sell here, we need to place stop orders here, limit orders here. We have all those rules the same way like in the recipe, and if we change any of those rules, this will mess up the entire recipe, will mess up the entire strategy that this professional trader or cook did. Now, what if somebody comes in and says, okay, I want to put beef in the cheesecake? Now everyone laughs, but it's exactly the same way in trading. You come and you have this nice, good strategy working for everyone, and you come and you put your own indicators on top of the strategy, and you're like, okay, I want to make it better, and I just want to lose less. Well, why would you want to lose less if the strategy was built exactly this way? If the strategy was perfected, and by you trying to avoid some of those losses, you will actually be avoiding the winning trades, and by avoiding the winning trades, you will actually hurt the winning ratio of the strategy, and then the end result, it won't be the same. Because in order for you to miss on that 30 pip loss, you may miss on a 100 pip win, and at the end you're like 70 pips, even you lost even 70 pips more because you didn't win those 100 pips on that winning trade. This is all you might be able to do. So, what is the lesson of this? We can't change the strategy. This is the worst thing for us to do. We should not be adding, we should not be taking anything of it. If the strategy is proven to work, we won't make it any better. Now, there is one good saying. You only need a few green lights in order to get to work. If you wait for all the stop lights to turn green at the same time, you never get to work. This is the same way with trading. You can't expect everything to be perfect in order for you to execute a trade. You need to accept that there will be red lights on your way to work. It's exactly the same thing. You need to accept those losses. Those losses cannot hurt you if you're trading the strategy the correct way. If everyone else is making money and you come and change something and you're losing money, what is the difference between you and those others who are making money? Think of it. So, we said so far a few things. First, we want to stick with a strategy enough time to be able to learn it. We don't want to jump from strategy to strategy without even giving it a chance to prove us that it's working. We can't change anything in a strategy, because if we change, the only thing that will happen is that we'll mess up the strategy. When we're trying to learn new stuff, it should only be that we're learning it in order for us to learn a new way of making money. A new pattern that will make you money. New way of trading that will make you money. Not something new that will teach you how to avoid losing. You should not be focusing on learning how not to lose. You need to focus on how to make money. Losing is part of it. Don't focus on learning how not to lose. Stick with a strategy long enough first to see if it's working, then to learn the strategy, to make sure you go over all the cycles, the making money cycles, the drawdown cycles, the cycles that are pretty much like break even. All strategies have all those cycles. Make sure that you go through all those cycles. After we go through all those cycles, master the strategy. By mastering the strategy, you will higher your success rate. Those are basic things to do, but if you guys are honest, I'm sure everyone will say that he's doing those mistakes. He's not sticking with a strategy or way of trading long enough. He's trying to change rules that somebody taught him. And we've never traded a strategy through all the different cycles. And all because I know most of you guys yeah, I agree. Those are bad habits. And the thing is that I know like 90% of you guys are I can say close friends, or at least I've known you for more than 1 year. I know pretty much everyone's trading habits, and I see where you guys have weak points, and pretty much everyone has gone through all this and is doing this at present time. So let's try this. Whatever way of trading you guys use, if you're doing patterns, and also probably more than half of you guys are doing patterns, go through all the rules. If you guys have any questions anytime, you see me on Skype all the time. Ask me about rules. Ask me where to place stops, limits. Stick with this. Don't try trade anything else. Stick. See how it will work. I see another very weak point is that a lot of traders trade because they're bored. You may be waiting for a setup, but you're in front of the computer, you see something that looks like a good setup, maybe a candlestick formation at some level, and you have nothing else to base the entry on, but only that candlestick formation. Or you see the market moving fast, oh, the market will explode here, and you enter, then the market turns around, kicks you in the butt, and then you don't even wait for that trade. The trade will go to that level, will hit the level, will turn, then you go back to your computer and you're like, hey man, I've been waiting for this trade so much. I took 4 bad trades while I was waiting, then price came exactly to that level and it turned in my direction. It did exactly what I assumed it will. The only thing is that you traded everything else you saw because you were bored, but you didn't trade the actual trade setup that you were waiting for. I know a lot of people do that. They trade because they're bored. If you know you're trading Gartley, well, don't trade anything else than Gartley. Just wait for that Gartley. If you don't have Gartleys today, well, don't trade. It's better if you don't make any pips than if you lose 50 or 100 pips today. It's much better to wait for your Gartley maybe 1 to 3 days if you don't have any on the screen today. But if you go through different charts, different pairs, most likely is that you may find. Now I know the last month has been very slow, but we're talking in general. Wait and trade your strategy. Don't trade something that you see on the screen. And the problem here is most of you guys know so much and you see setups all the time, but you have not you have not mastered any of those techniques of trading. And as you're waiting for something to happen, a setup to develop, you will trade something else that you have not mastered. You will lose on that trade. You get frustrated. You may make a mistake on your actual good trade setup. George, David is asking why would I sell euro based on my system now. Based on my system now, I wouldn't sell it because I don't trade Asian market. This black candle that you see, this is only opening of Asia, nothing else. It's not a signal to enter. This what you see here with those arrows, it's only the opening of Asia. Now, there was a signal to sell here at this candle, but I still wouldn't take it because it's Asian market. But the reason is, now the corrective move was not very good, but still this is a setup. Price has been trading bearish. It is a very simple system. Price is below the automated trend line. We're trading bearish. We have bullish corrective move. Now, what we do is we wait for price to come and finish the corrective move. How do we know when the corrective move is finished or completed? We know that the corrective move is completed when price comes and trades close to the upper side of this blue range. This is not Bollinger Band. This is FIB and time-based indicator. Now price came, completed the corrective move, and here this candle gave us the sell signal. The next candle, the red candle, gave us the sell signal. The red candle closing below that indicator in the middle. This is what gave us the sell signal. Now, even though it's an Asian market, it's still the trade went well. Would I trade it? I trade it's very rare that I trade the Asian market, and if I do, I would do it on yen pairs. But this is the idea behind the system. Now those black candles are something additional I've put in just for my reference. I have like UK Open, US Open, Asian Open, and then I have also UK and US lunch time as those black candles here. But this is a simple indicator. It's called paint at time, and you just put the time that you want the candle to be painted. You choose the color, and Fibonacci Trader will automatically color that candle. Yeah, like I said, if this wasn't an Asian session, what we'll see is, let's just go back with the candles, and I'll open candle by candle. Price is trading at the low side of the indicator. We can see the histogram moving up and up. This is showing us that corrective move is being completed, even though price is not actually moving bullish. this can only tell us that the bearish move will be faster. And what we're doing is we're waiting for price to complete the subswing, and even though price is not moving bullish during the corrective move, the indicator is calculating even the slightly bullish move and the time, and it will tell us the exact time when the subswing is completed, or when price is actually ready to continue the bearish move. Here price came to the indicator. The indicator is pointing bearish, telling us that still the bearish momentum is bigger than the bullish momentum. And the only thing we're waiting is the sell signal. The sell signal comes from the red candle, and this is when we will sell. I will place the stop above this candle. I would place the stop like 15 pips above the candle. So if the candle is at 71, so 86 would be my stop, all the way up here. And the rest is rules of the strategy. I know some of you guys are attending the class tomorrow, and you will go over all the rules. It's pretty simple. We have the trend line. We have this, we call it swing completion indicator, that tells us when the corrective move is completed, so we can look for sell or buy signals. And what else we have? We have the daily range here, the support. This red line is the support for the day. Here on top we have the resistance for the day, and of course the resistance and the support are moving based on the momentum, the buy and sell interest, and how fast price is moving. And then this red line here, this is the trail stop. So now, since price is moving lower when this candle closes, now right now I can move the stop 15 pips above this flat line. When the next candle closes and we have a flat line here, we'll be able to move it 15 pips above this line. And we'll also probably have a couple of limits, maybe here and one here somewhere lower. No, I'm not. Fivefish is asking if I'm still in the trade. I'm not in this trade because it's during Asia. I was explaining the trade setup because someone asked, okay, how would we proceed if it wasn't an Asian session but regular UK session? And this is how we would have proceeded if it was a UK session. But we would have filled target 1 and our stop would have been somewhere at 70. The entries, the stop would have been at -6 or 7 pips right now, and we would have like 25 or 6 pips captured on the first target. What we do is we always want the first target to be greater than the stop. In this case, the stop is 7 plus 15, 22 pips. So we want to make sure that we would capture at least 22 pips. And if we take the latest move, we see where the 382 is. We have a 382, so we'll be targeting 618. This is our target. This is our profit. if we can capture 22 pips until 127, 127 would be the first target. Let's see if there is 22 pips. 16 pips. We can't take 127 for a target because the target would be smaller than the stop. So we would go for 618. Now, if we can't fit the limit above the red support line, this line that we have here, and we will pass on the trade. Meaning that if price is too close, now if price would to form another sell somewhere here, most likely is that we won't take it because price is simply too close to the support line for the intraday, and we cannot make profit above the support line. We want to make sure that the limit will be bigger than the stop and that we can fit the limit above the support. Now, if David is asking if I have a distance where I want to stay away from the daily range, there is a lot more other questions that we will answer tomorrow, but those will be part of the class. There is a distance that we use to determine if we can take a profit or if we should be looking for counter trend trade, because now soon when price moves closer to the support line, since the support line is pointing north, we will be able to take what we call counter trend trades, which means now usually we can only sell when price is below the ultimate trend line. We cannot buy. The only time we can buy is when we have counter trend trades, and if price gets a little closer to the support line, we will have the opportunity to look for bullish signals and take the ride from the support to the resistance. I want to say thank you to all of you guys for attending the class tonight. I hope you guys enjoyed the presentation. If you have any questions, please shoot me an email or see me on Skype. I will see all of you next Monday, and I know some of you tomorrow. Thank you guys. I wish you all safe trading and have a good day. Bye-bye.